All right, standard deviations. I've been meaning to make this video for a long time, and I started making some notes on a Notion to kind of have a guide or like almost kind of a script too. But I said, screw it. I'm tired of making these notes. I just want to do the video, and we'll just kind of do it like live on the video. We'll go through and find some examples. I don't know. I do better unscripted. But anyways, I got to at least give you some details on what standard deviation is and how to use it. So I made a couple of brief notes at least. Standard deviations and their applications to power of three and market maker models. The logic behind power of three, using it for power of three and market maker models are a little bit different. So I'll kind of talk about that if I remember. I hope I remember. But standard deviations, as far as power of three, every power of three has limited energy, and standard deviations help us find those limits. So when we're looking at a particular power of three cycle, whether it's daily power of three or 4 hour or 1 hour, it doesn't matter. You can use, most of the time, you can use standard deviations to project where price may move, and then you can understand behaviors within that could happen in the future and anticipate price movements. So standard deviations are drawn with the Fibonacci tool. These are the settings you need. Mine are all black, but I have a white, like a light background on my chart. So if you have a dark background on your chart, make all these a light color. But you need 0 and 1, and then negative 1, 1.5, 2, 2.5, and negative 4. Sometimes I add negative 3.5 just to give me like a little range at the end instead of just a negative 4 point, but that's up to you. So that's what you need there. I didn't take a background of it or a screenshot lower, but I like to turn the background on a little bit. You'll see that in my examples in just a minute. So yeah, the important levels are here. Standard deviations only act as a guide to understand price movement and potentiate behavior of future price. Price doesn't really care about the standard deviation levels themselves necessarily. What you I mean, they kind of do, but what you really want to look for is like price action to the left that lines up with these standard deviation levels. You want to find like a PD arrays or old highs or lows that price would actually interact with inside of this guide. The only time where I really go off of the standard deviation levels themselves is if we're in an area of like new all-time highs. I have nothing to the left to base price on. So I'll just use standard deviations to give me a guide as to, okay, well, it could go here and it could go here, so on and so forth. There's 3 different ways that you can measure and draw standard deviations based on both power of 3 and market maker models. You can use, I'll say this. So power of 3, you can measure standard deviations off of the manipulation leg, the distribution leg, and the time opening. I'll explain what those mean. With market maker models, you're going to only really use distribution leg and manipulation leg. The time opening is particular to power of 3. And then I was going to start going into it, but I'm just going to show you. That's not it. My examples. So the first one I have is an easy one. This happened Tuesday morning. This is London session. Let me do this. I'm just going to put it here. So when I'm looking at like the beginning of the day, I love these high time frame candles. Mainly because they draw out the time opening of whatever time frame I'm looking at. So the daily open is here, 6 p.m. The daily open is here. And when I sit down at the chart, it's probably about 8, so we're pretty close. What I'm looking at and this is a daily power of 3 that we would be measuring, what I want to figure out is where could price go for the day. This day was kind of weird, but at least the beginning part of the day, the standard deviation measurements worked out. And I'll show you what that looks like. So when you're looking for power of 3, you want to look for the manipulation move of that time cycle. For the daily power of 3, your manipulation is going to take place during the London session somewhere. And this is right at like 2 to 245-ish on the 15-minute chart. Look at this bullish leg compared to from Asian session, 8 p.m. It's just kind of these tiny little candles that are doing nothing, and then boom, and then boom. So like it just shoots up and then shoots down and continues to shoot down. This is clearly manipulation before distributing lower, right? So when you see that, ideally in live price so that you can then find a setup to catch the distribution down to these levels. But when you see this manipulation leg and then it reverses and does a little market structure shift, you have to have some kind of change of state of delivery in order to confirm that this was a manipulation leg. You can then measure it, and it will project your projections down here. So what you want to look for is price to the left, and if anything lines up with these levels, to make sure that it looks like it's drawn correctly. So when we look, like -1 is basically mean threshold of this order block. 2 to 2.5 is this low, and 3.5 to 4 is kind of this sell side liquidity, order blocky stuff. Like these are things price is gonna interact with. These are good targets to have, good places to put limit orders. So we kind of know that that's going to be drawn correctly versus, let's say in this case we went with the distribution leg. 1 to 1.5 does line up nicely with this low. 2 to 2.5 is just in the middle of this candle. It's not down here by these order blocky stuffs. And 3.5 to 4 is out in no man's land, already well past the liquidity. So it just doesn't line up quite right. Is there anything? There is a little more. See, like, I guess that's not even an order block either. It's just like the middle of these candles. You know, it doesn't really line up with anything. So if you draw them from different points, like why this low and not this low or this low, how do you know which is the manipulation leg? That'll come over time. Unfortunately, it's not necessarily something that I can teach because sometimes it is always a swing point. So I can tell you that. You can't just anchor this here in the middle of something and say, oh, look, it lines up. It does have to be, you have to actually measure a leg of price like that. But I usually just like to go with the swing low that made the swing high, or the swing high that made the swing low if it's for measuring it the other way. But the swing low that made this swing high, there's your manipulation leg. And just check if it lines up with stuff over here. If you're already kind of on the way, you can also look if price to the right lines up with anything. So like in this area, 1 to 1.5, you're going to get a retracement of some kind. 2 to 2.5 could be the end target, and you could get a retracement there too. And then 3.5 to 4 is max expansion. So if you hit this level, one can expect that power of 3 to be over. So nonetheless, if you play this out here, I'm on the 15-minute chart. I could have got onto the 1, but the market opens at 9:30. We had made it into the 2.5 zone. We retrace into somewhere. It's hard to calculate where it could retrace to. It could theoretically go all the way back in as far as entry or origin. Really, you don't want it to break past the extreme point, because then you're done. But it could retrace as far as it wants to, up to that point, and then it shot down and hit our 3.5 to 4, and it's not going to go any lower. In fact, it turns completely around and goes the entire other way for the rest of the day. And while this power of 3 for the day was completed, there was no real good way to end up measuring the bullish rally that we had yesterday, which was unfortunate. I tried measuring from wick to this high to this low and this high to this low, and I could never, in hindsight even, could never find anything that lined up properly. So sometimes you can't use standard deviations, and then you just got to read price and order flow, how it's flowing, and what it's respecting. So sometimes it's just the way that it is. So that is an example of the manipulation leg. If we scroll back, was this one on the 1 minute? Uh-oh. Is that today? That is today. So back here somewhere. That was the London one we just did. Okay. So this one is an example of how it can be used as a market maker model, not a power of 3. We're somewhere in the 10 a.m. to 2 p.m. 4-hour candle. We're also in 1 a.m. to 2 p.m. hourly power of 3 potentially, but this was an example used for market maker model. And it actually kind of didn't really follow it, but it at least gave me terminus, which not only do you need to figure out how to get into a trade, but you need to know where to get out. And so at least it gave me that. But we started climbing up here. We did make SMT at the highs somewhere for smart money reversal. Came down. In my opinion, the low risk buy should be after a market structure shift. I'm pretty sure. I can't remember exactly. It's been a while since I made those videos. But nonetheless, so the last leg up here was the manipulation leg. See if I can zoom in a little more. The last swing low, the swing low that made the swing high. I measured that. Coincidentally, if you went with the distribution leg, pretty much the same thing. But then when we look to the left to make sure that our measurements are correct, what do we have? In this zone, we've got some nice wicks, liquidity. In this zone, again, we also have an imbalance that is not fully filled in or closed over. So that's a nice target and or place where price could react. And then 3.5 to 4. Let's see what's over here. I'm only on the 1 minute chart, so I'm wondering if there's something over on the 15 potentially. But believe it or not, I do believe this 1 minute was fully respected all the way. This 1 minute imbalance. All the way across. Completely, there it is. Which falls into our zone. So we did close over it a little bit, so it was probably interacting with something else on the higher time frame, but every time I switch time frames, the whole chart gets messed up, so I'm not going to do that. But typically, there's going to be something higher time frame than the time frame you're on for entry. That'll line up with these levels too, especially terminus. But yeah, as you can see then, we started distributing. We did not get any retracement in this zone. So most of the time when that happens, we'll come down to 2 to 2.5. If we just like blast through here, we'll come down here and then retrace. So if we just blast through 1 to 1.5, we'll come down to 2 to 2.5. Then retrace back up here and then continue on. Or we will get a retracement in here. And here and continue on. We didn't get any of that, which is fine, but it at least gave me where the end was going to be, and it respected it very well. So that is how you can use that in market maker models. Again, what you really want to make sure you're looking for is it's not just any manipulation leg. And just because it's the last leg before a move down doesn't necessarily mean anything. You need to change the state of delivery to confirm that that was manipulation. Otherwise, it could just be a retracement that respects, in this case, bullish order flow and continues higher. So you need something to break to show you that price is changing direction to know that that was the manipulation before changing direction, right? You got to go up before you go down. AMD, power of 3, it's all kind of coincides. So let's go look at, I had one more example back here somewhere. It's really handy. I use it a lot, or I try to use it a lot for the daily power of 3 to give me technically my daily bias. But you can't, it doesn't always, it's not always available on whatever, time frame you're on or whatever. Standard deviations are nice when you get the ability to draw them, but sometimes you don't. So this is on the 15-minute chart. So this is trying to understand. Actually, I'm going to go back further. Where would I start looking at the chart? 7 a.m., probably 7:30 a.m. my time, which is about 8:30 Eastern. So this is to understand daily power of 3 and where the day might go. Look at what the day has done so far. Since the daily open, we have just gone down during London. We manipulated down during London. Manipulation happens during London. Into a high time frame PD array, 15-minute fair value gap, which was all the way in discount. There was SMT down here. That is, I've already made a video about SMT. I don't remember, what all I had said in there, but I'm going to tell you now in this video, SMT is required for me to verify every reversal. And I don't take a trade without SMT. I need it. That's just the way it is. With how often I've seen it fail without SMT, and how often it succeeds with SMT present, I always take a trade with SMT. So anyways, I always like to make sure to comment there was an SMT down here to confirm that this was the end of the manipulation, and now we are going to reverse and go higher. We are below the daily open, so there has been only manipulation at this point. If we are thinking about this in terms of power of 3 or AMD or open high low close, open low high close, there are differences, but we opened, consolidated, moved lower, moved higher, so we're going to build more of the candle, and then we'll come back down some and close, just like every open high low close ICT ever shows and talks about. Okay, so when you get to the chart, what have we done? We've manipulated down into this. We have structure shifted. This swing high was broken with some displacement there. Okay, so now we have a valid leg to measure from. This is the distribution leg. I wonder if it's easier to see on the 5-minute. Yeah, kind of. So we'll go back to the 15 because that's where you measure the daily power of 3 from. That's the manipulation leg. And I can't tell you what was on the 4th. We had 10 a.m. Jolts job openings. Not really that much of a powerful news driver. So let's just say 18,500 to... Do we really think we're going to move 500 points today? Probably not. That is a massive manipulation leg. So you should be looking at using the manipulation leg as often as possible. But when it is just absurd, it's probably not going to be the correct way to measure where price is going to go. In which case, we'll go with the distribution leg. Now, on a small news day like Jolts, we got 18.5 to 18,750. A 250 point day, half of that, much more reasonable. And this lines up with this zone. This lines up with this zone. In fact, I think that's London high or Asian highs. Yeah, overnight highs, whatever. And this lines up with this. Every zone has something that lines up with it beautifully. And like, what more do you want? What more do you want than this buy side right here? So because of that, this just makes the most sense. If we go, back to here, like the buy side from yesterday, yesterday's high, doesn't even line up with the first zone. Like, it's insane. It just doesn't make sense for a day like that. That's when you can use distribution leg. So what we should expect is some consolidation. On the 15-minute, it might just be a down candle, but that's 15 candles on the 1 minute, right? Let's go down to the 1 minute. Hopefully I don't screw myself. Okay, here we go. So let's just play this out and see what happens as best we can. So we're in this zone. See if we get some kind of retracement. Yeah. Which happens to be the 9:30 open. We get a retracement. So now we want to see price come up into here and take like all these overnight highs. Boom. Came right up into it. There's your jolts. But that's just retracing. It'll shoot higher. Pretty sure. I think we wait till the afternoon. That's okay though. It's the whole daily power 3, so it's the whole day. 2 o'clock comes around, drop down. There it goes. Right up to 2.5. I think we just blow right by it. But we already had our retracement in here. And it does drop a little and then pops up and takes our terminus up there. What time is it? About 3. I don't really think we go a whole lot higher. Yeah. Once it hits terminus, it's done. There's 4 o'clock. So a big wicky daily candle, but you can see we open here, manipulate down. We measure that manipulation to see how high we can go. We come literally right up to -4 and then drop down a little bit and close. That's a bullish candle. It's just got big wicks. Exactly, open, low, high, close. Perfect. So that is the idea of standard deviations to help you measure a candle like this. I think that was all the examples I had on this screen, but I can bring in some other ones. Just to have a look. So standard manipulation leg. Hopefully you can see that. 9:30 a.m. does manipulation right at the open. Judas swing. Creates buy side. but it trades lower and market structure shifts. So I draw the manipulation. We come down to the 1, retrace a little, shoot down to the 2 to 2.5. That can be it. Or we can go to max expansion at 4. So it does that, hits there's a new day opening gap, I think, that this lines up with, and that's all you need. I can't zoom in, unfortunately, from the screenshot or anything, but we end up consolidating, and then boom, we have some manipulation, takes out some sell side, shoots up, and does a change of state of delivery, so I can measure that manipulation leg. Well, what do we get? This lines up with this order block. This lines up with this buy side. That's as far as we need to go, but max expansion is always a possibility in any of these cases at -4. And what do? We come up to this 1 to 1.5, we retrace. And we come up to 2, and we are finished. We take buy side and we're done. So that's that manipulation. I think I have another distribution example in here I could share. So look at the manipulation leg on this bad boy. I'm not going to measure that for a 2 p.m. Actually, this is just a market maker buy model. I'm not going to measure that. That's insane. You know what I mean? So you measure the distribution, and there you go. We come up to 1, we retrace. We come up to 2, we retrace, and then we shoot up to 4. It literally lines up perfectly. And time opening, I didn't really get to talk about time opening. I'll cover it really quick. Sometimes you can draw the standard deviations from where the time cycle opens, so 4-hour open down to the low of the wick, the low of the manipulation, or high. So from the open to the end of the manipulation, you can measure it based off of that as well. And that's just like, if we scroll into here, there's not really a good manipulation leg. There's not a good distribution leg, really. And it fit better to use that. But again, that's only, like, look at this. It just, time opens, it goes bam, bam. There's nothing really great to measure. So I measured the opening to the top, and we blew past 1.5, retraced in 2.5, came back to 1.5, went down to 4, just like we're supposed to. So I know that was fairly basic, covering standard deviations, but you can only fit so much into a video. So if you're interested in learning more about it or chatting about it, as I say in every video, my Discord is in the description. Pop in and feel free to ask any questions that you have. All right. Catch you next time.